Hey, Tate here. Today we're taking a look at technical analysis for the US 10-year government bond yields. I'll cover wave analysis with Elliott Wave Theory and provide multiple scenarios price may take and explain why I prefer one count over another. Let's take a look at the different possibilities. Starting here on daily time frame and still following this high time frame structure that we've been going through. In this one we've had a nested pattern up in here before starting to impulse up higher with these smaller time frame counts unfolding as 1, 2, 3, 4, 5 into possible third and then fourth and fifth. Now again, we've had this as the highest high here on RSI, which would again mean more that momentum is to the upside. Unlike in here, we have already taken out the highs that we had on third of third. Of course, on a smaller time frame, we did have a very high here, very high RSI reading here of that third of third of third of third. So it would make sense that we have had this high up in here. Now, again, what we're currently looking at is to look to complete the third of minute here of that third of minor. So in here we would be looking at, let's go to smaller time frame. We would be looking for this as a 1, 2, 3, 4 and then fifth here. We have some targets here for that fifth wave. And generally as third wave here is extended, we don't need to see an extension on the fifth either or as well. So so these would be the targets. Now if we are looking at the current structure that we would be having more on local structure, we can be zooming in a bit here and taking a closer look. Now we were following this count here as a 5-way structure as a 1, 2, 3, 4, 5. And we had the potential of either having this as a very short 2 or this would be creating an ABC. Now the ABC is no longer possible because again we have retraced more than the 1.618 extension of more than this 1.618 of this structure over here. So we can't have this as an A, B and C because again we violated the 1.618 retracement rule. At the moment, what we see here is a divergence between the high and another high, creating this bearish divergence to the downside, and is very much a possibility that we could be seeing this as a 1, 2, 3, 4, 5. I don't really want to go too much lower time frames than 1 hour because again, we can see all this mess in previous structures that just don't make too much sense. But overall, we could be seeing that we have 1, 2, 3, 4, 5 in here already complete, with this divergence giving us at least some kind of confidence for that count. So overall, what we would be looking for this as an 1, 2, 1, 2, and why not a third here? It's just because they're extension targets. Now on higher time frame, of course, one of these targets or these targets that we had on higher time frame for this sub-minute count are not going to be hit that well if we have this as a 1, 2, 1, 2. Of course, this could turn into some kind of diagonal where we would have some kind of structure in here, just creating a very weird looking diagonal here. Do I see that happening at the moment? No, because again, this was very volatile of a move, and so does this seem to be very volatile and very fast of a move. Generally on diagonals, we don't see that as much, but yeah, that is something that I'm looking for actually at the moment, is this pullback down here. Now interesting levels for me would be this 38.2 and the 0.5. 38.2 has had this as a resistance line and now a support, and we could be seeing another support hit here before we are going to be going up again. The 0.5 has had this high and this high as a resistance before going through it and back testing it, and now that is again lining up very well with the 0.5. So I would be expecting these two areas to be very crucial here, around 4.1% and 4%, give or take. Could be even a zone here if you're into trading this. What else? Well, again, after the wave 2, I would be expecting higher highs to be made, taking out the previous RSI readings here on a smaller time frame. Again, the third of first here should be taken out with the third of third. So once this calms down, this RSI, if we are getting this pullback now, we would be getting this and taking out the highs here on RSI, and that would give us more confidence and more confidence about this count being a third of third. So yeah, that is actually something that I'm actually at the moment looking at and expecting this to be happening. When is this going to be invalidated? Is when we are going to be breaking these lows here. And at that point, we would definitely need to be looking at this count again and possibly even making it so that this structure here is the fifth wave. I still do think that this was the fourth wave, the third wave, because of the RSI high. But could we have this as a fifth wave? Of course, it is possible having two expansions on one structure. So at that point, again, we will look into this more as well if we need to. But that is for all the expectations for now. If you made it this far into the video, I would appreciate the likes. Links to my free Discord server in the description below. And for now, I thank you for watching and hope you have an amazing rest of your day. See you next video. Bye bye.